What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we are going to be covering the SoFi stock and also the overall market. And guys, today is just another one of those days where the market is just bracing for new news coming out tomorrow. We got Fed Jerome Powell talking tomorrow. Is he going to do an interest rate cut? Is he going to keep rates the same? We just have to wait and find out. Right now, Poly Market is pricing in 99% of no rate cuts at all. But there's other commentary from retail investors that see a 60% to 40% chance that there's going to be rate cuts tomorrow. So right now, nobody really knows what's going to happen, but you can see that is why the market volatility continues to just be up and down every single week, because you continuously get that new CPI, PPI, inflation, GDP, and unemployment data that just goes back and forth and changes every single week. So we're going to see tomorrow what exactly happens. But guys, I believe this is a buying opportunity as long as you don't believe that there's going to be rate hikes, in the next year, 2025, 2026. If there's going to be 2, 3 rate hikes, your stocks are going to go down a lot. You're going to see a lot of money getting pulled out of the market, risk off. But if you do see another 2, 3, 4 rate cuts in 2025, 2026, then this is a good buying opportunity because multiples are going to go back up even higher because you got companies, revenue exploding higher, like a SoFi that I predict could potentially grow 35% this year. So we'll be looking at some of the valuations right now. We'll keep it very simple on a price to sales. This is what we were covering months ago. We're not going to really look at PE ratio right now because the management team just said they're backing off of profitability, going after market share, going after growth. So why would we really look at PE ratio in its second full year of profitability, guys? That number will drastically come down over the next 2, 3 years when they go into more durable profitability once again. But right now, we're back in growth mode, and I'd like to see that. I'd like to see us taking market share in Q1 and Q2 while the market is freaking out about interest rates, inflation, and all of that nonsense. So, guys, this could be a great opportunity. So, we're going to take a look at that. And we got a great video for you today. Be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We will be keeping you updated weekly. Let's get into the video. All right, guys. And of course, this is why the market is down today. You can see the market is getting prepared, risk off for tomorrow. The Federal Reserve will make a decision on interest rates. Will they cut, hike, or keep rates unchanged? Right now, the market is pricing in a 99% chance that Powell does nothing, keeps rates the exact same. But when I ask you guys, the retail investors on my Twitter account, we got 454 votes. It looks like 35% of you guys are saying there's going to be a rate cut tomorrow. So not the 99% that the poly market sees, and 65% of you guys say the market is going to keep rates the same, or Fed Powell. So we have to wait and see. Of course, guys, if you think rate hikes are coming, you should probably be selling all of your stocks right now because multiples are going to contract, go a lot lower, risk off. So pretty much there'd be no reason to hold stocks right now if you think rate hikes are coming. I personally believe we're going to potentially get 2, 3 rate cuts inside of 2025, and you're going to see multiples go back up potentially higher than where they were at the beginning of the year in January before Trump, announced all of this tariff headlines that just crashed the market for 6 weeks in a row. You got a 13% pullback on the QQQ in 6 weeks just going off of Trump's commentary on tariffs. So, guys, it's been a crazy market. You can see volatility is going to be going really high for tomorrow. We just have to wait and find out. But you guys continuously see the market right now is so news driven, okay? You'll see green, boom, you'll see red because just these headlines keep dropping. Just then, Pentagon to cut up to 60,000 jobs. And just read the comments, guys. I mean, people are just going absolutely insane. Recession, recession, recession. This is what happens when these headlines continuously happen. But you guys can see what's been happening with the government spending. It's just been absolute toxic waste. We need to see a lot of those government jobs, continue to get wiped out because, the market is just seeing our, debt go higher and higher and higher, our spending just into nonsense areas that we just don't need. So you continuously see these headlines, guys, and you continuously see the recession fears grow even higher. Here's another headline, guys. Look at this. The bond market is pricing in a recession as investors protect their portfolio. And that is why you're seeing a 10% correction on the SPY, a 13% correction on the QQQ, and a 19% correction on the IWM because you're seeing this tariff fears price in this massive recession. So, guys, you need to be making a call on where you think the market is headed. Do your research. rate hikes, your stocks are going to crash a lot lower. Pause right now, you're going to see this up and down. But if you see rate cuts in the future, we're going to see multiples go a lot higher. We just have to wait and see. Nobody knows where the market is really headed right now. But if you look at Trueflation, guys, they're doing a update tomorrow for the FOMC decision day. The market expects no cuts. Let's review the inflation data. CPI and PPI came in below expectations. This was 2 weeks ago. Their data is showing a big drop in inflation. But guys, the data that the Fed is observing reflects the reality of about 45 days ago. So this is almost 2 months ahead of the government data that you're getting. So look at this, guys. They're at 1.65. Government data is reporting 2.8%, guys. They're showing an absolute crash the entire month of the back end of February, and then a little tick up inside of March. So, guys, the data is just all over the place on Trueflation and then government data. But right now, guys, we're just going to be looking at multiples on what SoFi is trading at right now, price to sales, or where we could be headed if we get some rate cuts in the future. So understand right now, price to sales, very simple metric. A lot of companies that, IPO'd and went the SPAC route that were getting price to sales multiples in those early days, but I think it's even better now because you're getting more durable growth. You're even getting profitability. You're seeing SoFi back off of profitability a little bit, which is fine. But guys, we had 2.6 billion in revenue in 2024. We topped out at about $18.42. That's a market cap with the outstanding shares, $19.5 billion. We were priced at a 7.5x in January. 7.5 times multiple, okay? And you're seeing SoFi also go more risk off because they're seeing that loan platform business accelerate even faster, okay? We had a $2 billion deal. Then we jumped up to a $5 billion deal. What happens if we get another $10 billion deal on the loan platform business? Diversifying our risk off of the balance sheet, guys, for lending, you're going to see this multiple go even higher to a 10 times or even a 12 times. But as of right now, guys, we're getting a revenue guidance from SoFi at 3.2 billion in revenue. So to get back to that 1842 at 19.5 billion market cap, once again, we'd actually only be trading at a 5.5 times price to sales. So this would be a much lower valuation than the 7.5x because you're seeing revenue accelerate 25% again. But guys, take a look at this. If we get what I'm predicting, 35% growth, that's 3.5 billion in revenue. To get to a price to sales once again, where we're at in January of a 7.5x, we'd be trading at $25 with the exact same multiple going off of price to sales 2024 and 2025. So 26 billion market cap. But guys, take a look at this. What if we do get 2-3 rate cuts into the back half of the year? The Fed predicts more rate cuts, guys, and we get a bigger price to sales multiple, that 7.5x, and we get that 35% growth, guys. We'd be getting that 3.5 billion in revenue for 2025, price to sales right around 10 times, a little bit higher multiple, $33 valuation at 35 billion market cap, guys. This is a very realistic multiple if you're going to see the loan platform business take off even further, okay? 10 times with two $5 billion deals on top of the $2 billion deal, guys. This loan platform business would start to become a very, very large business, guys. I mean, once you get into the $10 billion range, I mean, you're talking, $600 million in revenue, over the course of the time frame that they use the loan platform origination. So, guys, this could potentially happen inside of 2025. We get a 10 times price of sales and you see growth go a little bit further than what SoFi predicts of 26%, jumped up to 35%, 10 times sales all day. You're going to be trading at a $33 stock. And this is very realistic. This isn't even fairy tale land. You're seeing other, SaaS companies out there still trading at 20, 30 times. Some of them even get up to 40, 50 times. This is very realistic for a fintech play. Great sales, great growth. You're going to see profitability really take off inside of 2026. But right now, guys, you can see we are going to be trading for 5.5 times sales if we just get back up to that level where we're at of 1842. This is a great time to be buying the SoFi stock if you predict further rate cuts in the future, or even, stocks holding around the same rates. If you're predicting, rate hikes, 2, 3, 4, inflation once again getting out of control, it's probably a good time to sell your stock. So make the call, do your due diligence, and see what's best for your portfolio. If you made it to the end of the video, I want to say I really do appreciate it. I enjoy doing this video for you. We're going to keep you updated on all the breaking news with the SoFi stock. A big day tomorrow with the Fed. Let's see what they say. Once again, be sure to smash the like button, drop a comment, subscribe to the channel. We'll be keeping you updated daily. Hope you have a great day.